Well, hi guys, welcome to this Moneycontrol live stream. It's that time of the month again when we get RBI to declare its monetary policy decision. It's a bi-monthly policy decision. Last time we had it in April and this time, in fact June rather, and this time we will be getting the RBI decision tomorrow at 10 a.m. So what should one be expecting this time around? Of course, there are expectations that the RBI will resort to a hawkish pause. But of course, let me get on board my editor, in fact, of CNBC TV 18, Latha Venkatesh, joining in to put into perspective what exactly this hawkish pause means. And, everybody is talking about the tomato effect and how the RBI will react to it. So, hi Latha, thanks a lot for joining in. First of all, tell us how will the RBI react to this entire tomato price surge, which has once again led the inflation to soar to somewhere around 7%. That's the expectation in July. So, what is this hawkish pause and how it does it really
early
impact?
rains period, normally traffic dislocation, rotting of vegetables, usually pushes up vegetables and tomato prices. But this time it has been very prolonged and a very steep increase, 200 rupees a kilo. So the government has been reacting. Now the numbers itself, it is not just a tomato inflation anymore. Most vegetables have risen 3x. So it is going to be even in June, the number for which we already have, it was a 12% YOY rise in vegetables inflation. Right. So it's going to be much sharper in July when we get the numbers. Food inflation is expected to go to 9%, and that will push the overall inflation to, as you say, 6.8 at least.
Right.
Now, what we will watch out from the Reserve Bank is how do they factor it in as continuing? To what extent do they change the second half inflation forecasts or even next year's? That will be the big thing. And how do they describe it? Do they say they will look through, or do they fear more? And they may fear more. I mean, their outlook on the El Nino will become very important, because the El Nino was always expected to hit the second half. So starting now, August, September, therefore the fears of other non-vegetable inflation is not behind us. Pulses sown area is less. Rice, the fact that the government has banned, white non-basmati rice exports clearly indicates there is a worry. It may be a little less than what they expected, and therefore they are playing safe. Wheat is anyway expected to suffer if the second half El Nino impact happens. Then the reservoir levels fall, and wheat is entirely dependent on irrigated water. If that falls, then wheat, we don't even have as much stocks as we have. Rice, we have 3 times the buffer stock. Yeah. But wheat, we are just about even Steven. And therefore, the Reserve Bank may not look at it, may not say as easy as, we will look through it. They may not be that easy about it.
Are there any chances of them revising the FY24 inflation estimate upwards in that sense?
Oh, absolutely. Currently, let me give you the numbers. The second quarter, the quarter we are now in, July, August, September, was forecast at 5.2. Yeah. Now, if July itself is going to come at 6.8, so the full quarter number will get revised up. So people will watch. Are they revising the full quarter to 6 or even more than 6? That will be one. Second half, this base pushes up the second half. Second half at the moment, I think, is 5.3, their forecast. Will they revise it up to 5.4, 5.5? That will be watched. And year ahead, actually the base should push it down. So will they push that base down? Will they push it up? These numbers will be really the most crucial numbers to be watched.
And amid all this, what happens to growth forecast? Because last time they had revised it upwards slightly, 6.5%. Do you think they will be in a position to retain that now?
Well, actually, the Reserve Bank has got growth right. Because if you remember, Jan, Feb, March, everybody was, when the GDP numbers came, everyone was expecting 5.1. It actually came at 6.1. Yes. Likewise has been happening even in the US. For both Jan, Feb, March and April, May, June, they have GDP numbers. The actual numbers are way above forecast. Like for the immediate quarter that just ended, that is April, May, June, the expectation was 1.8 and it came at, guess what, 2.4.
Yeah,
so 2.4. Growth has been stronger than expected both in India and in the US. So RBI is in a fine spot. Their problem could be precisely that, because the tax growth net of refunds is 15.5% direct taxes. Okay, I'm not counting indirect, which means there's a lot of money. And if goods are few, then money will chase and push it up.
That's true.
So, therefore, if anything, strong growth will be the problem. There is no question of them revising it down. We have to watch out whether they interpret the strong growth plus the unfortunate supply disruption in food to be a bad mix and therefore sound hawkish.
That's true. And last time, of course, growth was surprising on the upside, but this time, inflation is also surprising on the upside. That's an issue. But let's talk about what the market should be factoring in from the RBI governor and, the kind of commentary that will come out of him. Anything specific we should be looking out for?
Well, two things that you won't look at and two things that you will look at. What you won't look at it is the rate action and the stance, because it's almost
pretty
unanimous.
much given that 25, in fact, a pause and stance remains.
But stance remains removal of accommodation.
Okay, so is there no chance that a stance would go back to neutral or something?
We got 10% of the votes that we got, saying that they may tweak the language. They'll keep it as removal of accommodation, withdrawal of accommodation, but they may tweak it in some fashion. But that's neither here nor there. What you look for is the non-stance rate signs. Will they sound hawkish? So one would be, to what extent are they increasing the inflation number? Like I told you, forecasts have to go up arithmetically. If one quarter you're expecting, you were putting in 5.2, it's coming in at 6.2, then the annual average goes up. How much does it increase will be one, and what language they use to describe it. Will they say we look through? Will they say we are afraid it will become a generalized inflation? How strong is their depiction of inflation? That language will be very important. They're bound to say that we want to see inflation aligned to the 4% target, but how much more emphasis will be important. The second thing, the market has already priced in this hawkishness because everyone knows the food inflation is bad.
That's true.
If you look at the swap market, they are actually pricing in 50% chance of a rate hike by December. So to that extent, people have priced in hawkishness. So chances are, if they don't sound that hawkish, if they give something for the bulls, and something for the hawks and something for the doves, sound even, you could actually expect a rally. In the sense, yields could slip a little and bond prices could rise a bit at the end of the policy. But that's what is priced in.
Right. One last question, Latha. Would this push up the, the timeline for a rate cut?
I think that is a very relevant question because it is pushing out everywhere. Even in Jerome Powell's case, there may be two views on whether he will hike again in September, etc. In India, there is that. Even that is a very frivolous or a very minor, very minor expectation of a hike. But this cut, many people were pricing it in Feb. And a majority in April after the last policy's hawkishness. The June hawkishness itself made people push it. They could push it further out. Now the few who were sitting in the Feb camp could also move to April.
All right, that's something which is I think a little more hawkish because everybody was working with the first quarter of or the last quarter of FY24, but then we are looking at a rate cut in FY25. Now that's the general consensus.
But I must say, all told, my expectation is the policy is going to be a 1 hour interest. After that, life will move on.
That's
I mean, there is US CPI and US growth numbers. That's and true. The Moody's downgrade of banks. There are enough impulses, Chinese trade data being very disinflationary, and therefore even if the yields move up, if Chinese data is so disinflationary, that their exports are not doing too well, I mean they'll dump more. So I think what the governor says will be of interest, but it will be overtaken by events very quickly.
All right, so that's the whole expectation. Of course, we will expect the RBI governor to revise inflation forecast upwards. How much of an upward direction that will go in, that's something that will, garner a lot of interest. But of course, Latha, I'll touch base with you tomorrow again at 11 o'clock post policy to get your views on what the governor has said or what he has done in the policy. But for now, I think it's a wrap on this Moneycontrol Live. We will be getting you coverage of the monetary policy tomorrow 10 a.m. onwards. So of course, don't forget to tune in for that. We'll have a battery of guests to decode what the governor has to say and the entire policy statement as well. So from me and Latha, thanks a lot for watching. Stay tuned to Moneycontrol for all your other news and updates.